Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here with Adrian Nicholson. Adrian, how are you doing today?
Doing fantastic, Roshan. Always good to be here on the Retirement Lifestyle Show. Looking forward to our podcast today. Happy to be back as always.
Yeah, excellent. And I'm looking forward to it as well. I think I have a great topic for today. As we're at the beginning of the year, and you start seeing. I know I see a ton of articles either saying, "Here's where the market's headed," or "Here are great stocks to buy for the year," etc. And I want to really talk about how to approach it when you get those emails or those articles that you see. I'll start us off by giving our disclosure. This is not investment advice. This is just something for you to think about. Please consult your financial advisor, your tax advisor, to make informed decisions. This is just the way I approach it and how I think about these things. And so, as I start us off, just with the market predictions on the year, I try not to pay too much attention to it. I will read what's being said, but when I say try not to pay too much attention to it, I don't go out of my way to find it, nor do I take it and typically make any moves based on what anyone's predicting on the markets. I get this email daily from Whitney Tilson. You can join his email list. I think you can do a quick Google search for Whitney Tilson's daily, and then you can subscribe to it. But at the beginning of the year, the date of this email from him is March 3rd, and I saw something interesting that lines up with these predictions. It said that well, actually, Adrian, let's play a little game here with this. Last year, there's a chart from Bloomberg that came out in 2024 that was sharing what the Wall Street strategists were predicting for 2024 in terms of the performance of the S&P 500 index. What would you guess you can give me a range or anything, but any thoughts on what the average prediction was for last year for 2024?
So it's a number, right? The average performance that they were
Mm-hmm.
expecting for the S&P
What per,
500.
Yeah, what percentage would the S&P 500 do for 2024?
I'm going to say 10%.
10%. What was interesting about last year is that it said for the first time in decades, Wall Street strategists see a down year for stocks. So it was actually negative, was
That's
the
surprising.
expected
I
return.
want to see
Yeah,
how often the strategists go into a year and say, we expect a year to end negative. Typically, I think they always like to do a positive number. And if it's a lower number, that means they really have a negative outlook. And if it's a higher number, a higher positive number, they have a positive outlook for the year.
so looking at this chart, and I'm just eyeballing it right now, it looks like the highest year prediction wise was about 2003. And that year they were expecting close to 20% return. And
Okay.
for last year, for 2024, it looks like it's a -5 or less was the average. By less, I mean a smaller negative was
Do
the
they have
average
the
prediction.
lowest negative return or the biggest negative return? Do they have that on there? Because I'm
This is
curious.
the only predicted negative since 2000, looking at this
That's
chart.
surprising.
So in '09, when the markets got absolutely crushed, down 30%, the average prediction was a little under 10% of a positive year.
Well, I guess since
So
it's an average, there's got to be some outliers in there that say I'm expecting either a big up year or a big down year. So I guess the
of
numbers don't
course,
stray that far away. So that does make sense. Okay.
yeah, there were people that are out there, but the reason I wanted to start off with that is just showing you that a lot of these predictions uh, aren't great, right? So that's why I mentioned at the beginning: speak to your advisor, your financial advisor, your tax advisor, etc. But and I'm starting going over the predictions and trying to share how I think you can make use of them. But with this, I mentioned earlier, I don't like to look at or make market predictions just because uh, you're going to be wrong, is my belief, more often than you're going to be right. So why spend any time or effort on what to me seems like a bit of a fool's errand, right? I just think
Mm-hmm.
you cannot. I don't expect you to be consistently accurate enough to do anything with it. So my thought was just, then why spend any time on it at all? And that's where showing you last year's consensus prediction on a negative in a year the S&P was up around 25%, just shows you how useful some of these predictions will be. But you're still going to be looking for generating ideas and what you can do in the market. So I do understand and recognize that you're going to want to look at things that are out there and what you can see and what you can find.
Yeah, I think the
So
value too is we talked about this on a previous podcast, and I think it was one of the topics I want to talk about is asking the right question. I think some people get drawn to the are we going to be on an up year or a down year? What percentage are we going to be up? What percentage are we going to be down? And to me, that's not the valuable thing. I think the why they have this number can shed some more light and give you some more information going to the new year. Why are they predicting it to be a down year? Why are they predicting it to be up year? What are the things to look out for? Yes, there are a lot of unknowns that come out with a year, but understanding the feelings, the directions, what's going on now can help better prepare you and give you more information than just say, hey, good year, bad year, what percentage, where that to me, you can't really make a lot of decisions off of that.
yeah, and I'll tell you, I don't disagree with what you said, but I do have a different approach and thought on it where I don't. I'd say I'd spend zero time on predictions of where things will head, including finding out the rationale. And the reason I started off by saying I don't disagree with you is because I truly believe, as an investor, there are many ways to be a good, profitable investor, and that you've got to figure out what works well for you. So, like in this example, Adrian, if hearing what all these different analysts' thought process are in projecting or predicting what direction things will head, if that makes you a better investor or more comfortable with making investment decisions, I think you should go ahead and do it. For me, what I found is in the past I've spent a lot of time on that, right? And when I look back, I think that time was wasted, and I think it could have been spent better because it didn't make me a better investor. It did not make an impact on where things will actually went, or where they were headed. So that's why I personally I would say, most importantly, do what you feel is best and will help you in your investment process for anybody that's listening. But two, um, with these things, once again, sharing my approach and my time frame, I'd rather spend that time looking into a business, a stock, or a company than spend my time looking into uh, why analyst X thought this would go up or down versus why analyst Y thought it would go up or down.
And then the only thing I would add to that, or I guess to pushback would be is let's just say you're reviewing everything like the analysts have to say or their predictions going into the year. And they say, we have very big concerns with this industry. And you disregard that. And then one of the investments or the companies you're looking at is actually in that industry that they say is very risky to stay away from. Does that in a
Mhm.
way influence or give you another data point?
Yeah, I don't know if that's a good thing or a bad thing. Quite frankly, the reason I put it that way is I've literally had a real life situation like this last year where I was researching a stock. I knew a friend was in the field. We just happened to run into each other. I mentioned it. He gave me his feedback, and it. tainted my thought process. So I just moved on. Like I stopped doing my research on it. I moved on, not because I thought he was right or wrong, just because I felt like I couldn't make an unbiased decision anymore. Right. And and now fast forward, that stock's up 30% right now. Right. So had I don't know if I would have bought it or not. Like I said, I stopped my research uh, midway through the process, and I did have questions. I don't know that I would have bought it, but that to me is one where it's an opportunity lost just because of a conversation that was had. So where I think you could be right and it could be helpful is maybe that helped me avoid a money losing situation, which where it would be very helpful. But on the flip side, it could make me stop my research on what could be a profitable investment.
Thanks for explaining that.
Um, so continue on that's my thought on just predictions of where the market will go and where it will head. I think there are just too many factors for someone to be accurate, which is why I called it a fool's errand earlier. I don't think consistent success in that space really exists for anybody, right? So it's not that I'm knocking the people predicting or the analysts are saying, haha, you got it wrong. I just think you're not going to be able to get it right. So um, for that reason, I don't want to spend my time on it. Right. I think the likelihood of it being right and helpful is low. Don't spend time on it, um, and and move on. Now, continuing on the starting there, that's with full on market predictions. Um, the next thing is looking at if you at you'll see a lot of articles. I like XYZ stock for this year, right? Buy stock XYZ and they'll have their rationale and their reason behind it. And that's where I would spend some time research and analysis on. Now, there's so many of those articles here. You've really got to figure out how to use your time well when you're looking at these stock articles. Like just as an example, I for in preparation for our podcast today, I just typed in what stock should I buy right now in a Google search, and there are tons of articles that come up and that come up that you can read. Now, once again, I wouldn't be buying any of these what the based on an article, right? These are just to me idea generation, right? What should I look at, and is this a company worth looking into? So a couple of things that I look at and why. The very first thing, because what I'm looking for is what I view as a good business at a good price. Most importantly is the good business side of things. So I'll take one of the names that they had mentioned, and I'll just look at, okay, what is the profitability of this business? That's where I'm starting. And what I'm looking at in particular here are what are the returns on equity, returns on capital, and returns on assets. And the higher the number, the better. The bigger the number, the better. Now, these are the standardized. These are the numbers as reported. There are definitely businesses where you'd have to go in and make adjustments. And I am missing those opportunities right now if they don't meet the criteria I'm looking for, because I'm trying to figure out where should I spend my time. So let's just say the company for the first thing doesn't have a good numbers that show up under those returns categories, the returns on uh, assets, equity, capital, etc. Then I just move on to the next one. And like I said, in this case, if there's a missed opportunity, that's fine because that's part of my process. How this is different from that conversation I mentioned to you is the company I was researching was meeting a lot of my criteria, and it was just this conversation that messed it up. Those conversations are not a part of my regular process, which is why if I miss an opportunity, just because I use these screens, that's okay. That's part of my methodology, right? I will expect to miss opportunities, and to me, missing an opportunity is okay um, versus making a bad move. So that's cost of doing business. I'll just move on from there. So once again, I looked at the return numbers, returns on equity, returns on capital, and returns on assets as my starting point of do I keep continuing on. So this is the first criteria of is this a good business, or those return numbers. After I've finished with those, let's just say it's met that criteria on those return numbers, then actually, Adrian, before I move on, do you have any questions or thoughts, anything on that at all?
No, not right now. I mean, those are very important metrics when you look at any businesses or companies out there because you're looking for ones that will make you money over the long time and are currently in a good position. And you pretty much ranked the important ones that you'll start with. I know another one you'll probably talk about as well is management. That's another crucial one that you got to look at companies. But can you really find that much information on something that's not purely numbers driven?
Yeah, and so that's the stuff that what I'm sharing today is the quick couple minute triage of should I spend any time on this? Right. So if I get a low number or a number I don't like on the return on equity, return on capital, it's not in the ballpark of what I'm looking for. That's when I'll just move on. Management is a very important part, and it's a something that I spend time uh, looking into, and I would highly advise others to do the same. But you can't put that in your early 30-second. Should I spend time on this? Or I keep saying 30 seconds. That's probably not enough. But let's just say uh, 10, 15-minute review of should I spend time on this company or not? If that's what I'm trying to solve right now. I just read this article and spent a few minutes on it. They listed these companies. Which of these should I add to my research list? So when I'm reading these articles, I'm not saying, hey, which of these should I buy? No, what should I add to my research list? So once I'm researching it, that's when I'm looking at management. So now it's not the management I'm looking at, although that uh, what I'm using as the profitability numbers or metric. I've definitely had people talk about that under management effectiveness. Right, management's
Mhm.
good if they are running a profitable business.
Let,
Is the way to
let me
look at it.
steer in another direction then. What about dividend yield? Because that sometimes jumps out a lot at some investors out there going in the year where they might start off looking at a company just based on how much income that they can get from this company in this year. Is that something else that you look at? Is that specific to a certain industry or sector, or does that come out later in the process, or is that just an add-on bonus?
So I'm not specifically looking for dividend yielding stocks, nor am I
Hmm.
not looking for them. So when I see that article which comes up, 10 great businesses with good dividends, I'm reading the article, right? But at the same time, I'm not searching for dividends specifically. When I'm researching the stock, I make note of it. I like that the dividend's there, but if it's not paying a dividend, it's not a criteria for me to get rid of the company.
That's interesting because there are some investors, maybe there's some listeners and viewers right now are just like, man, Roshan, I love a good dividend company. That's where I start because that income is so important to me in my portfolio.
There are dividend only investors, agreed. So for them that would be they read the article of 10 stocks I want to buy for 2025, and the first thing they'll probably look at is dividend yield, which is good for them because they're dividend investors. So
But
it's
then you would
just
need to look at that profitability as well. Can they consistently pay that dividend is crucial.
for me, the profitability is it a good business, right? Because that's what I'm looking for first. There's I love Buffett quotes. One of them is time is the friend of a wonderful business, the enemy of the mediocre. And I just if I have a good business and I do other things wrong in my analysis or my valuation of the business or of the company, I think the business uh, can fix any of my errors just because it's a good business, right? And you had mentioned management earlier. I do think to a certain degree with good management, they'll figure things out. There are always threats to business, but if you have good management in there, they'll figure out the right way to approach it. And that's what, as an investor, you pay them for, and that's what they get paid the big bucks for helping guide the company. So to me, these are just these returns on equity, capital, asset numbers are just easy ways to say to really eliminate businesses that aren't good. Now, as I mentioned, I'll miss some because you should do some adjustments in your modeling when you're looking at this. But I just am really trying to say where should I spend my time right now? What do I want to deep dive on? And said differently, it's where am I more likely to be successful? There are going to be companies and good businesses that have poor numbers here. That when you look at what's going on with the company deeper and you make some adjustments, they'd actually be good numbers, or they have poor numbers now, but they're heading in the right direction. But once again, there I feel like I'm looking for a needle in a haystack. When I have good numbers here, I feel like I'm looking for something easier to find.
Yeah, that all makes sense.
So that's the good business piece. Then with the good price, I'll look at valuation. And so I'm looking at all the things that are pretty simple and basic, like one, price to earnings, which is how much are you paying for a dollar of earnings. The peg ratio, the price, which is the price to earnings ratio divided by growth. How much is the company growing? Uh, uh, and that's not just, the growth part is how much they're growing, but it's really what are you paying for that growth is the price to earnings growth. Then I'll look at other other factors as well. Those are usually the parts I look at first, and then enterprise value to EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Once again, what I'm looking for here, I am trying to eliminate names on the list, but I'm being liberal here in the sense that if they meet one or two of the criteria, or the numbers aren't too far out of whack from what I look or what I'm expecting, I'll keep it on the list. So on that return category, I'm not. I'm relatively strict with trying to get rid of something because I want to make sure it's a good business. But for example, if I'd mentioned returns on equity, capital, and assets, if one out of three of those numbers are good, I'll keep it. I'll keep looking into the company. If all three are bad, I'll probably move on. And similar thought with the price to earnings, the peg ratio, the EV to EBITDA number. I'll look at price to sales and price to book. I'll look at all of these, right? And if I think any of these look pretty good, I'll keep digging. But if I think that they all look bad, I'm going to move on. So once it meets these criteria, I just add it to my research list. And then once it's on my research list, that's when I start doing the deep dive. If it doesn't meet the criteria, I don't add it. So very frequently I'll see this article of 10 stocks I love for 2025. I'll read it, I'll do that quick search, and none of those will make the list at all. I'll just move on. And I I can't think of a time where all of the companies on any of these lists have made it. I can think of times where a few have. That's what's typical, right? Anywhere, if it's a list of 10, I'd even be surprised if five of them made the list. Usually, it's just one or two. But this is just a quick way. What I wanted to share with our all of our listeners today was really two things. One is when you're spending your time looking at the market predictions and where things are going, just consider if that's time well spent for you or not as an investor, right? And then further on, when you're looking at all these articles of here's the stocks I love to buy right now, which there just tends to be a lot of at the beginning of the year because they tend to be under the context of these are stocks we like for this year. Well, these are two criteria that I will use which and I'm grouping them at a higher level. There are multiple under it, but profitability. I'll look at profitability of the companies, which are those returns on equity, capital, and assets, to see if I should spend more time on it. And let's just say it meets the profitability test. I'll then look at valuation and see if the valuations are something that would be somewhat attractive to me. And then if they do, it makes my list to research. And I do want to point out once again, I'm not buying any of these things right now, right? Even if it passes both of those tests with flying colors, well, then it might just go to the top of the research list, and that might be what I do my next deep dive on. And if it doesn't look that great, if it kind of meets it but not, then it'll just go on the list, and it'll be more like when I'm finished researching whatever company I'm doing a deep dive in now, I go to that list of stocks to research, and I say, okay, where do I want to spend my time on next? And so that other company will be on there.
I mean, those are all great, effective ways to help you get to that ultimate decision-making stage, which I'm assuming is part 2.
It is. That's when you've got to then do the deep dive, which I have covered on previous episodes. I can cover it again with the checklists of going into the quarterly call transcripts, the annual reports, and then you just never know where that's going to lead you as far as how deep your research will go. I've mentioned this before. I have spent months on companies before and not bought them, and I've spent days on companies and have bought them. So it really does vary by the company, by the business, and what you find as you're doing your research. But that's for today. That's what I've got for you. A quick guide on how to read these articles, read these predictions, and how you can use them to make you a better investor. Do you have any questions at all, Adrian?
No, that was really great. And I hope our listeners and viewers grab some important insights to help them make better investment decisions this year.
Yes, and please reach out to us if you need any help. You can get our contact information in the show notes in the description. We're always here to help. Like, subscribe, give us 5 stars, keep control, and achieve your goals.
Schedule a conversation with Roshan, Adrian, or Erik today at retirementlifestyleshow.com. Roshan and Erik are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.